Hello, everybody. Happy Sunday. Happy Sunday. It is Sunday Q&A market prep with quant data with me, ABJ. Um, Today, I thought it would be a really good time to kind of recap Friday. Now, we haven't done a recap in some time. We've been going through some lessons and all that. So I prepared something really short. It's really just going to take me like 15, maybe 20 minutes to go through exactly how Friday went. And there was something very specific about Friday that I wanted to go over. It was the fact that I continued to say that selling puts below 64.40 was free money. Right now, I don't say that often. I try my best not to say that because I obviously know in stream some people take what I say to heart and they do put large amounts of capital in sometimes, and I don't want to be responsible for everyone's losses, but there was quite a very visible amount of delta that kind of told us that, you know what, there's no way in hell that dropping below 64.40 after the whole Powell speech was going to happen. It was very unlikely. And so let's just really quickly dive into it, because I think it's going to be really interesting for everyone to see that. Now, Friday, those opportunities come once in a while. So if you did feel like you lost a lot of money or you didn't get as much as you could have, the market's always open, right? We have a full week of trading this week, and the market's full of surprises. So it's always about adjusting accordingly and making sure you can take as much as you can. But before we start this, right, I brought this up really quick because Friday we saw a lot of exposures change. Now, the market exposures are dynamic. Okay, they are dynamic. What that means is throughout the time series, throughout the time of zero DTEs especially, they could change. And they did change. They did change quite heavily on Friday. I'm going to go through that. So something I like to echo a lot is from Bruce Lee, right? He says, be water. Be like water, right? Be fluid, right? It can, with water, you can move up and down in the markets, right? You can change your mind, change your bias. So it's just kind of like a silly close representation, but I do firmly believe this. Like, if you are trying to trade the market exposures and you mirror your bias and you say, hey, market can't go up like this, there's no way, rates are like this and credits like this, and that's just not going to do you a lot of favors, right? We are at the mercy of the market makers, market dealers, right? We're retail traders. We kind of just try our best to do what we can to capture what we can, right? What's the most likely scenario for price based on what we're seeing, right? So a little bit of notes as well, just really briefly here. So I know you guys know that I've been trading iron condors a lot, right? I think especially during these market environments where we've been breaching all-time highs and we don't know when the real pivot is. Iron condors, based on math, they are the best use of capital. Now, why is that? Why are iron condors the best use of capital? Well, we know the market can only go in one direction, right? So when you sell both a floor and a ceiling, right, the market can only go and breach either one, right? It can either breach the ceiling or it can breach your floor. But one side of your iron condor is always going to win. Now, with that being said, what happens when we do have a losing side is that your winning side kind of buffers the damage to an extent and allows you to manage your losing side more effectively. What are some of the key things that you can do to manage your losing side, right? It's this was from our last 101. Apologies for that. Right? What are some of the things you can do when you're getting tested on one side? One is very easily sell more on the winning side. Right? That's like the number one thing you can do in an iron condor when you are losing on one side. Right? Number two, adjust your losing side further. Right? That's another way you can adjust your position. Right now, you will have to buy them back as a loser. You probably did incur some losses along the way. Same stripe. So sorry, that's number one. And then number three is actually adjusting the Condor altogether. Adjusting the entire Condor IC to fit the new range. It really is just adjusting the entire thing. So these are all the things that you can do to save yourself when you are in a iron Condor that's getting breached, right? And rule of thumb for me, now this isn't always, this is just something that I've learned to do. It's helped me effectively manage them a little bit better. Is when a position is getting when a position is getting tested quickly, sell further on the losing side and sell closer to the winning side, or double down before closing the losing side. So what that means is, before you think about closing your position for a loser first, you actually want to open positions before you close the loser. This allows you to take advantage of the IV, right? We are only so fast with our trigger finger. So when IV starts to really expand and you start to get worried, the first thing you want to do is actually adjust first. So sell further and sell closer towards the winning side before you close your position, your losing one. This allows you to take advantage, of course, of the IV fluctuation. And then hopefully by the time IV starts to settle down, your losing position isn't as bad. Because sometimes I've seen a losing position, you know, bloom all the way to $305, let's say $350. And then as soon as IV starts to settle, you could have bought it back instead for $250. Right? That's because you're panic selling. You're panic closing, rather, not selling. You're panic closing your losing position. And that's just never good. Just know that in an iron Condor, of course, you have that ability to manage effectively, because you always will have one side that's winning, and it helps you buffer those losses just a little bit better. And that's exactly what you saw me do on Friday. We're going to go through that Friday. So we're going to bring up some charts really quick. Let me see if I can zoom this in a little bit. Yes, perfect. Okay, so before we even start with Friday, looking at the chart anyways, opening IV on Friday was 37%. This is probably in anticipation to Powell speaking, right? Everyone was expecting him to, do something. We didn't know if it was up or down. We had an inkling of an idea that it was going to go up, but no one knew for sure. So IV was was increasing all the contracts premiums. So because everyone was interested in capturing that potential move on a short time frame, right? So that's why IV was 37%. And I'm going to go ahead and show you. So this was the chart, right? Let me close out some of these bad boys here. So this was SPX. Now, what we see on SPX is that with that opening IV of 37%, right? How low were we able to sell? Now, I know some of you guys were like, wow, why would you bother selling? Because I did get this comment in the chat. Why did you bother selling 63.20? It is so far down. It's so far down. Well, because I want my opening position to be a winner, right? And IV was giving me that opportunity. It was giving me the opportunity to sell really far. So how far did we sell down? If you guys remember, 63.20, 6,300. I'm just going to draw that line for you right now. This is our first position. It's all the way down here. This is where we opened. Okay, this is where we opened. Look how far down we sold. What's the first thing that I'd like to do when I sell my first position? Either side, either calls or puts. We want to sell outside of yesterday's range. Yesterday's low, we know, was 63.43. Right? And as price started to do its thing, we sold again below yesterday's range, 63.20. 52. That was yesterday's range. Okay, so that's our second position right there. 63.40. And then eventually 6,400. So that's 6,400 right there. And then I want to show you guys the breach. So this, it actually didn't actually fully breach, but we sold it as a loss anyways, just because we were a little bit unsure. We were a little bit shaken at the fact that maybe 6,500 was actually coming. So I'm just going to quickly draw all the levels that I have, because these are all the positions we sold. This is green. Right, and then eventually we sold the 64.30, which was right here. And we started to do that after the Powell pump. Okay, so I'm going to show you, this is the most important part. I want to go through here. Right, so this was the profile of the day. Now, we're going to ignore the net drift. We're going to go back to stock price really quick. So 7 a.m., right, that's when Powell decided to speak. That's when he was scheduled to speak, not decided to speak. But this is, let's actually bring it up to the open first. So this is 6:30. What are we seeing, right? We're seeing at the open, why did we sell puts first? Ivy was very high, right? We allowed us to sell very far. This was a big mess, but there is something here that was piquing our interest. What was MVC? What was MVC and where were we trading generally? MVC was 64.35. 64.35. As price started to climb up a little bit, I'll zoom it out to 6.55. I want to show you that. 6.55. We started to really inch forward, right? Where are we now trading? At the 55 mark. Are we in a gamma bullish zone? I can say yes. I can say yes. We are in a gamma bullish zone. What is the gamma bullish zone? It's when bullish gamma, green gamma starts, right? And we're firmly sitting inside it now, right? You guys can see this right here. We've moved past 6,400. That's a very big psychological level. Everything above us is green, which means long calls, short puts, right? Long calls and short puts. Now, what would be my expectation if we climb up above 64.40 and we hold? This was the key. This was the key, and this is why on stream I said, at this point, I don't know if market's going to go to 6,500, but I do know we're not likely to break 64.40. And I want to show you the amount of delta that we had. Right, so this is how we ended the day with $1,300. Right, very, very easy trade that we did. So this is 7. We juiced past it, right? What do we see? This is 7 a.m. We've juiced past 64.40 now. 7 a.m.'s right here. This is the big ripper candle. Right, at this point, I sold those 64.80s. And of course I bought them back as a loser. But I sold those 64.80s, got nervous, got very nervous, because what do we see in front of us above 64.80? The possibility of 6,500. This gave me a little bit of heartache, for sure. So when I sold that 64.80, we sold it for, let me check it really quick, 0.65, and had to buy them back at 0.22. This was really bad. But we had to adjust it to, we had to sell a little bit more at 65.15. I wanted to sell above 6,500 as a just in case we do bloom past 6,500. If we did, I didn't expect us to go any further than that because there wouldn't be any interest further than 6,500. Now, there was a little bit of 6,510, but in comparison, you can see 6,500 has more than double the interest of 6,510. The market generally doesn't push price further than the gamma obligation because there's no reason to. They're not rewarded, they're not rewarded for doing so. So as we went on the day. I'm going to show you the start of London close. Where are we trading now at London close? Are we very much above that level that we talked about, 64.40? It was at this point that I started to say, okay, at this point, there's no point in doing anything further. We know we're going to ask ourselves, right? What's the most likely scenario for price? I asked you guys in stream too. What's the most likely scenario for price based on what we're seeing after the pump? This is now London close. In my mind, likely scenario for price, I said that we may see 6,500. I'm not that confident in that potential. Reason being, the gamma here at 64.95, 64.90, 64.85. It's a big gap. It's a big empty spot before we get to 6,500. We would need a big juice, another catalyst event, in order to push us further towards this 6,500. I didn't think that was possible. So that's why I started to buy back those losers of 64.80 because I wasn't sure anymore. Sold the 65.15s, and then we started to sell this new one here, 64.40. Now, 64.40, this was the mark that I said if you sold below it, it's very high likelihood that you're going to have them expire worthless. So we sold the 64.30s. This is why. So take a look here at 64.40 at London close. You still had a lot of premium. IV was still relatively high. It was well above 22% at that time. You still got a little bit of value for selling below 64.40, so long as you stretch the legs out a little bit, right? So maybe like a 20 wide. That's kind of the max I do on a 0DT time frame. But why do we think that why did I say 64.40? There's no chance. I don't want to say no chance, but very highly unlikely that we break this. In the entire profile for this Friday is bullish. Everyone, there's not a short in sight, basically, right? No one here is short, right? We can see that. No one's short. No one on the gamma side is short. Everyone seems to be long. They just want to hold their longs. If we somehow broke through 64.40, let alone 64.75, we know we did lose 64.75 at some point. But this, with 7 billion worth of delta here, the market would actually flush. Dealers and market participants, they would have to get rid of all their long deltas here, sell them for a loss, roll them further on time. It would be huge. It would be a huge move. A huge move is required in order to break this 64.40. And that's the recap of the day. So the end of day iron condor we sold was the short legs 65.15 and 64.30 eventually because we rolled them up. Now I know the everything before that, the 64 and under, was so safe. There was no point in buying them back at this point. And that's how you have to stay dynamic with the market. We saw that 64.80 started to get breached. Obviously, we never broke through it entirely, right? But I just didn't feel comfortable with it anymore. And hopefully, you guys saw the value in us trading live here, because I think it's very useful. But yeah, that's why we sold even higher, and we got rid of these guys and just continued to pile on. And that is something that we talked about here as well, like rolling and adjusting, not rolling, but adjusting the iron condor as you begin to get tested on a position. Your ability to adjust it is going to really change how much you are able to capitalize on the market every day. That's my little presentation there. I'm going to run the Q&A now with you guys. Hopefully this week is already looking pretty bad. I wanted to actually really quickly show you guys what this is kind of looking like. If we start looking at on the Friday, right? It's 6,500. Obviously, there's something there for this Friday. That's pretty darn close. I know market right now is taking a little bit of a dip because of crypto. So crypto was kind of showing us, but Monday. Every day seems to be pointing at 6,500, and I'm not sure if that's going to be rolled out into time if we actually get it early, if we get it this week. Hopefully we do, but something tells me that we might be in for some trouble. I feel as though it's not going to be that easy to get through 6,500. But we'll see. Let's see if we hold above 6,400. That's going to be interesting for sure. But that's it. I'm going to close this up for YouTube. For anyone tuning in, help me out. Comment, like, subscribe. Tell me what you want to see. If you want to join in on the live streams, I'm live every day. Y'all can come in and see how we do. Not too shabby. That's it. I'm going to close it out for YouTube. I'm going to run the Q&A with Quant Data. See you guys.